Chinese foreign direct investment into the U.S. hit a record high of at least $14 billion last year. More than 70% of that money flowed from private firms instead of state-owned enterprises, marking a real shift in how China invests. Karina reports.
The General Motors building in Manhattan. Zhang Xin, the CEO of Soho China, purchased a large stake in it last year. That acquisition was just one of 18 Chinese investments in U.S. commercial real estate in 2013. The U.S. energy sector also saw a lot of investment from China last year, as did the food sector. For 2014, high tech is on track to ride the next wave of Chinese investments in the U.S. A new report by research firm Rhodium Group and Asia Society says more than $6 billion in high-tech deals are pending from the first quarter of this year. That's a giant uptick from previous years. Chinese investment capital flowing into the U.S. tech sector is driven by just 2 deals, both by Lenovo, which is acquiring Motorola Mobility from Google, and IBM's x86 server business. But Thilo Hahnemann, who co-wrote the Rhodium report, says this is just the tip of the iceberg. Hahnemann expects 2014 to be a banner year for Chinese investment in U.S. technology companies.
More recently, we see a much broader spectrum of sectors being targeted. That includes advanced manufacturing sectors like clean energy, medical devices, for example, but it also increasingly includes advanced service sectors.
Most of the activity centers on acquisitions, but he says Chinese companies are building more of their own research and development facilities in the U.S.
But one trend that's interesting and that we see increasingly happening is that Chinese companies are building research and development facilities from scratch. So they're building R&D centers, design centers to tap local U.S. advantages, such as the highly educated U.S. workforce or the U.S. institutional environment that helps them to protect their intellectual property rights, something they cannot find to the same extent back in China.
All foreign acquisitions are screened in the U.S. for potential threats to national security. But now Hahnemann says another concern among businessmen and politicians is whether U.S. companies have equal access to Chinese markets.
It's certainly being perceived as unfair that Chinese companies are now competing head-to-head with U.S. companies in the U.S. market, and U.S. companies are very much limited investing in China, especially in these high-tech sectors and in advanced services. And so that needs to change, otherwise there's a real risk of a political backlash.
Hahnemann says that would hurt both countries. For China, it would mean fewer opportunities for their brands to grow in the world's largest market. For the U.S., it would mean fewer jobs. According to Rhodium Group, Chinese firms employed more than 70,000 full-time workers in the U.S. last year. Karina, CCTV, New York.